If it is, it's not enough, we take it. Good morning, guys. Welcome to the live stream. We're going to have that bell ringing in just a few moments. And heading into market open today, the market is actually moving up a little bit. I'm not going to say like it's up from closing price yesterday. But hey, compared to the price action overall all day yesterday, the stock market's like right around that big support, right around 455 to 455.30. So I'm going to be watching this area very, very closely today to see if SPY will start to bounce back up at open. And I will say this, guys, I kind of prefer a drop down today, but if the market wants to be resilient and go up, I mean, why not, right? So I'll be watching it really, really closely today. There's a couple levels that I am keeping an eye on. To the upside, 457.50 is a huge resistance that I'm watching overhead. But even bigger than that is 456. We've seen a lot of bounces, specifically like right at 456.30 over the past few days. And this red line that I'm marking in blue right now should end up being a fairly big level as far as price action is concerned. So let's go, guys. Heading into open today, I saw a few stocks on the pre-market screener that were going off a little bit to the, well, specifically more to the downside. Pfizer actually had a pretty big drop. They had some bad news with their weight loss drug. Apparently they want to discontinue it or something. Doesn't sound good at all to me, but let's go. Bad Tom, I have calls. Sorry, Xbox. That's funny. Jason loves the beats. Thanks. Let's go, Mason. Walter PPK, what's up? What's up? Hope you're having a good day. Man. Let's go look at AMD and Nvidia. These two stocks were down a lot yesterday, and they're actually sitting still right around their lows. Look at Nvidia. It has a perfect support right around 464. If we're able to get under 464, it might be where to start to get that momentum to the downside. All right, there is the bell. In the words of Apollo Creed, ding, ding. But yeah, looking good. Nvidia is actually bouncing up off support right now, but obviously the market just opened. It can go anywhere still at this point. Still sick today, guys. Well, not, I'm not like sick anymore, like in the head or anything like that, but I still got the cough and all that. So just, keep in mind, bear with me a little bit. Rockstar Games announced the date for the GTA 6 trailer. Let's go. Let's go. TTWO, almost up to 160 right now. That daily chart looks awesome. Thanks for the news, Norcon. For real, let's go, man. Let's go. Yeah, that's pretty good, Norcon. I like to hear that. I actually just texted my buddy. I was like, hey, they got the trailer date announced out there. So thank you for that update. Wow, let's go. I've been loving Rockstar. Look at this at open. 161.11, guys. Keep an eye on Rockstar Games. Seriously. This is looking good, Norcon. I really appreciate you saying that. That's awesome. Thank you there. Mike C, good morning. Good morning. Corbin, let's go. Ryan, Xbox, what's up, guys? Tank Daddy Dollars. All right, now that market open, let's get that watch list up and see what we're looking at to the upside. Coinbase looking pretty good, guys. I know people were telling me that Bitcoin was up a little bit this morning, and I go look at it. Definitely was doing fairly well early on today, so I'll keep an eye on Coinbase. Interesting setup. Zoom is another one that I'm watching very, very closely. We talked about this on last night's video. This was one of Mike's plays last night, guys. But look at this trend line that Zoom is actually bouncing off of and running up off of. It's been under this trend for a long, long time, having beautiful, almost near perfect bounces off of this trend line. And now we're actually starting to hit it and move back up a little bit. So I'll be watching Zoom very, very, very closely here. If it starts to break 69 bucks and break 70, I'm going to look at some calls. I think that it could break this trend line with some pretty good significance, I guess we'll say. Yeah, Ryan, Coinbase for sure. Definitely on watch here today. Go to the 1 minute chart, actually. There we go. All right, Coinbase. I mean, not bad. How's Tesla here, guys? I know Tesla had a pretty bad move this morning and last night. The stock's tanking down. Elon's probably pissed in the background. Unless he wants this, but... Wow. Interesting. Sorry, guys, I had to go cough up a lung again. Yeah, let's go Grand Theft Auto 6. Lemonade puts. Let's see, LMND. Wow, falling down under 18 again? Or right around, yeah, right around 18. Damn, Lemonade. That was a big gap down, guys. Not a huge one, but, I mean, any type of gap down is kind of brutal. CRM, Salesforce. Oh, nice. Earnings continuation move. Love to see that one. How about Palantir? Oh, guys, Palantir's under 20 bucks again. No, what about DraftKings? Okay, at least DraftKings is staying solid. Penn Gaming tried to pop up in pre-market a little bit. That's weird. Disney tried to pop last night. Based on last night's video, you seem really excited and impressed about the Cybertruck. Yeah, you know, I really was, man. I really was impressed with the Cybertruck. The way that that thing beat the Porsche 911 in a drag race while towing a 911 was insane. I'm actually on the fence about selling my Hellcat to get a Tesla truck. But there's a big but here. My only problem is that, like, the Tesla truck, like, for example, my Hellcat in the color B5 blue, there's only, like, 2,000 or 3,000 of them, like, in the whole world. At least in the first couple years made like mine was. So whenever I'm, like, sitting there and I look at, like, the truck, you know, right now the truck is really cool. But, like, what about in, like, a year whenever there's, like, 200,000 deliveries? You know, then out of nowhere, it doesn't become rare anymore, right? So that's kind of like yeah, exactly, Corbin. I am lying. It's just a thought I keep having, you know? I'm like, should I do it? No, probably not. It makes sense. The torque is there and it's armored. I know, right? And it has multiple doors. You can put children in the back, which for me would be a big help. But man, Xbox, you got me dying. Oh, don't give into the hype for the Cybertruck. Yeah, I'm kind of with you there, with you. I feel you there. Let me check out Boeing really fast. Nice! Boeing continuing breaking yesterday's high. Look at that, running up above 233. Looking pretty hot this morning. They were having great not news, but just great movement over the past couple months, and wow, there has been some good news as well, but buy a Ford Flex? Oh my gosh, Mason, no. Ford Flex. Ugh. I actually know a few people who have those. I can't do it, Mason. Can't do it, man. Speaking of Ford, how's their stock looking? Oh, pretty rough again still. Big red candles. Ford stock is going to be pretty tough, I think, over the next few months, but I think it's getting to that point of being near support. So once it starts to dip a little bit, like around 10 bucks even, I think grabbing some shares down here will be a pretty good idea. Here's what I'm going to do, guys. I'm going to keep money available to buy shares at each dollar mark so that I can just ride the momentum down. Like, I'll buy at 10, I'll buy at 9, I'll buy at 8, I'll buy at 7, I'll buy at 6, I'll buy at 5. And then if it starts going back up from there, then you're talking like, you know, your average price might be like 7 or something, you know, something close. So then you'll be into Ford for the long term. I do like them long term, but, you know, short term, kind of shitty right now. But if I'm being honest, toaster cars, what the? Yeah, it does kind of look. Okay, I see that. I see that. I could see that. Boeing still kind of up there, but just started pulling back, literally. All right, watch list. What are we looking at? Coinbase again, really. Still the highest stock on the watch list here, 2.78%. It's not even up that much, really, so maybe today's just a slow day. You know, nothing's really popping off too much. SPY itself is starting to try to bounce off 455 to 455.20, right off that support that we were talking about eyeing up for today. Watch SPY for a potential run back to the upside here. I kind of hope it falls, but it'll be all right either way. Nvidia had a big dip and then came all the way back. Don't know what the hell's happening there. Walter said F is losing money on every EV. I'm sure they are, but will they always? I kind of believe in Ford coming back. You know, everybody's always all pissed off at companies in the short term, but I'll be real with you. The more people hate a company in the short term, the more I want to buy it. I mean, Hunter actually talked about this the other night at our live Q&A, and I actually thought it was a pretty good statement. Whenever you start to see out there articles about companies being terrible and going bankrupt and etc., 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 that's usually the better time to start buying, you know, in history. Like, for example, anytime Tesla was talked about going bankrupt, you should have been buying it, you know. Same thing with a bunch of other stocks. You know, General Motors. I mean, look at that stock. You know, people said that this sucked. You know, this one was sucking too. And now they had one good piece of news yesterday, and now everyone's flipped the script. Or a couple days ago. With their EVs, you know, becoming more profitable and etc., etc. You know, Ford will get there. Like, I doubt that they just die off. I like to buy in at the bottom, you know. Kind of like it with COVID, you know, Ford crashed, had a nice dip to the downside, ended up ripping back. Everybody wanted Ford when it got up here. Whenever it was down here at the bottom, nobody wants it, right? But I do. I do. I'll tell you who does. Me. I want to sing that Taylor Swift song right now. But that's a really big statement that I really like to adhere to, because I found it to be very beneficial on buying off the bottoms over the long term. Ryan says Meta, hell yeah, I haven't checked on them yet today, and they are having another red day, down to around the low of yesterday. Watch 322 for a break. I think that could be a great level to the downside there. Nice, I like it. I think Meta might end up breaking that at some point today. Hopefully not. Ooh, I'm adding a new sound button today, guys. I was watching a movie last night, and this makes me have to show this here. We got this, I was watching a movie called Jerry Maguire. I know that a lot of you guys have seen that out there. Well, you better have seen it anyways. I know all my older crowd has seen it. The younger crowd out here, I doubt it. I doubt they have. Corbin said, everyone was saying how Disney was bad for their woke agenda. That was the time to buy. Exactly, Corbin, exactly. And Rick, good point. Exactly. Be greedy when others are fearful. Be fearful when others are greedy. That's exactly the statement, Rick. I was actually thinking that in my head a couple minutes ago, but I didn't say it. That's funny. But yeah, Disney, that's a good example, Corbin. Exactly. And here's another one. We'll look at Bud Light, BUD. Nice. Christian had a good scalp with the surge bot on LLY. Nice, Christian. LLY's been hot lately. LLY, nice. Coming up off that dip. Broke out above 490 or 594, sorry. Good stuff, LLY. That looks awesome. Oh yeah, Angel saw it. Show me the money, exactly. Here, let's see if we can get that sound button to work. I hope it's not too loud. Don't worry, I'll turn it down really quick if it is. I promise. Show me the money! Show me the money. Let me try a different one. Show me the money! All right, no more of that. That's not what I thought, guys. Not the button I thought. I did not think that he was gonna be yelling it that loud. But I love that for the stock market. I wish I could get like a good sounding button for that. I might have to make my own. I still need to make some of the Wolf of Wall Street buttons. All right, Boeing. There we go. Keeping the momentum. 234 to the upside. Looking like we're having a pretty damn good move today from Boeing. I mean, that's a fantastic move. Looks awesome. That is great. How's TTWO doing today at open still? Ah, dip back down. Damn, I was hoping that they'd still be up. Boeing, though, beautiful move. That's a great run this morning. Good green candles coming in. Come on, break that high of day for us. Don't double top. LLY, I got to go back to them. Okay. Starting to get some red candles mixed in here and there. MSTR, Master, or MicroStrategy. Master. What the hell was I thinking of? Like tools? Wow, yeah, MSTR. Having a great day today. Let's go out to the daily on MSTR, because I know it had a big dip, but it's coming back amazingly well now. This is actually a pretty bullish setup, too, on the charts. Been kind of following a little trend here over the past, couple weeks or so. Nice. Looking good. I'm looking to get my last round of golf for the year in this weekend on Sunday. Or Saturday, I mean, sorry. Yeah, I saw that, Mike. They have a new spin-off restaurant called Cosmics. That is interesting. McDonald's. I think that'll end up doing pretty good. Hopefully it's not a flop. You guys know me. Oh, I love the McDonald's. Man, McDonald's is so good. Where's our menu, man? Menu. Why don't they have the McRib on here? Did they finally get the McRib taken off or something? How come it's not on here? Huh. Well, either way, that McRib has been out. I'm not sure if it's still around or not. I think it's out still, though. But yeah, Cosmic sounds interesting. They sell like drinks, snacks, kind of like a Starbucks is what I've heard it been compared to. All right, Boeing, you're right there, damn it. You're right there. Palantir trying to go. It's trying. Up to $20.10. Okay. That's not too bad. All right, let's try to find that momentum today now. Let's get on that surge. Get on the surge. We got Tessie to the downside on the surge. Wow, Tesla has a bearish tendency on there. Pfizer also to the downside, which I was hoping Pfizer would run up, but they had some weird news today with their weight loss drug. Apparently they like want to discontinue the drug, which honestly like blows my mind. Because, I don't know, everyone's talking about these weight loss drugs, but maybe this one has a bad side effect. Let's see what the real reason was. Let's see. It has side effects. Yeah, that's what it says. I mean, what the hell doesn't have side effects, right? Adverse side effects, though. Weight loss pills. This is going to start messing people up, guys. Seriously. That's going to start messing people up. Peter from Family Guy is coming to Fortnite. Oh, God. I'm surprised they haven't done that yet, Norcon. With all the crap that they do on that game. When will that game finally die? I mean, come on. Can't they come out with something different yet? Xbox, that post you made is hilarious. With SpongeBob. I need it. That's one of my favorite episodes, man. I love it. Alt has a successful weight loss drug trial. What's Alt, Xbox? Let's see. Corbin said, bet you can't guess my weight. I know, right, Evernight? I gotta get out there and still check out the Crunchyroll. Attack on Titan, right, Evernight? Yeah, Mike likes those ones. He likes those. That's hilarious. Nice, though. Boeing, come on. Let's get that momentum up through that high of day. Come on, get through there. Tesla's just really consolidating. But, guys, look at this. This is kind of cool. Tessie's in a little bit of a wedge pattern here. I just want to show you guys this real fast because you might be able to make a play on this once it picks a direction. We'll eye this up. Might try to go shooting tonight at the range. That would be fun. Isn't it in the 30 to 45 minutes from open the play drops? What's up, Xbox? I'm getting confused there. But yeah, Corbin clocked in at 147. Nice, Corbin. I don't know if that's nice or bad or how you feel about it, but it's better than my weight. I'll tell you that. With this sickness, I dropped down to 123 yesterday, so. Or a couple days ago. I'm sitting back, I think I'm at like 126 again now, but man, I really am pissed off by the weight drop. Yeah, no, Xbox, I mean, no. There's no type of set thing like that, like 30 to 45 minutes from open to play drops. It could be a little bit later, Xbox, but I see what you're saying now. I see what you're saying. It does wait. They do wait about like, 15 minutes or so usually, but they can go earlier too. It just depends on how that, how the volatility is at open and, obviously thousands of factors, but check out the AMD chart for sure, Joe. Thanks for joining up today, man. Nice. Yeah, AMD ran up a little bit, hit resistance, coming back down. Actually, a pretty good opportunity, I'd say. Like it. Ryan said J-Pow's coming soon. Yeah, so he'll be speaking in about an hour from now at 10 a.m. Central Time or 11 a.m. Eastern Time. I just want you guys to realize that this isn't like an insane, this isn't an insane meeting or anything. It's literally a fireside chat at Spelman College. Now let's Google what is Spelman College, right? Spelman College is a liberal arts college for women. So I don't know how to make of that. A liberal arts college for women. And this is where Powell's going to be speaking. I'll tell you what needs to happen. They just need to keep the effing door shut is what they need to do, because I feel like there's going to be some protests going on, but it's at a college, so just, keep that in mind there. Fireside chat. I don't think he'll get too crazy about the economy or anything crazy like that, so just keep that in mind, guys. Honestly, like, I'll be realistic. You guys probably don't need to watch this. I'll be real with you. I'm probably only gonna watch it just for the possible shutting the door. Yeah, Evernight feels that, can't ever gain. Man, it sucks. Okay, Corbin's trying to grow too. Corbin. Hang on, guys. Sorry. Gosh, guys, sorry about that. So brutal lately. Especially in the mornings, it's really, really brutal, but at least it's getting better. Get to the chopper, I know, right? Yeah, I'm with you though, Corbin. Trying to grow out there, Got to get that weight gain going. Not just like a weight gain, like I make sure you get to the gym and everything like that too, of course. Yeah, recovery, please, Xbox. I just want to let you guys know something that's coming up next week. I know that, we got almost 50 viewers here. A lot of you guys show up every single day. So I just wanted to let you guys know that, I've been talking about having a baby for a while now. My girlfriend's been pregnant. The due date is actually this week. So it's coming on December 4th, which is Monday. So I just wanted to show you guys, I just wanted to tell that to you guys because as next week approaches, like when the baby comes, I'll have to leave and I might not be on stream for like 1 to 2 days. So I just wanted to let everybody know that for 1 to 2 days, I might not be here, but right after that, we'll be back in action. But I just wanted to let everybody know that just so that, if I didn't show up or something along those lines that, you guys knew what was going on. And then also, like I said, by Wednesday of next week, I should be back for certain if it comes on Monday, but appreciate you guys. Just wanted to let you know that so that, you guys didn't get too pissed at Tom for not going live or something. But yeah, QQQ rejecting now today at 388, starting to move a little bit lower, and I like this for put opportunities out here. Nice, looking pretty fire. SPY just sitting right around the same. How's VIX? I really want to see VIX pop off today. I would love to see the VIX go up off of this support. Hoping it doesn't run down to new, lows or something of the year. Which it might do. SPY itself, I think, might double top right here, but if not right here, maybe up around 474, 480-ish. I could see a double top more of up there. But come on, SPY, short term, what are you going to do? Get a good move for us already. Hey, thank you, Lisa, Corbin, Ryan, Xbox, let's go. Angel, there we go. How about taking 5 days? I would, Angel, but, don't want people to start switching over to different live streams or something now, right? But, yeah. Wouldn't be offended if you took the whole week off. But no longer. It crosses the line. I like it, Xbox. Appreciate you guys, but we'll keep it however good we can. Keep in mind, it's just for a couple minutes in the morning. It's not like I'm live all day, right? So only for a couple hours anyways. Hey, thanks, Mike. I appreciate that. I'm too humble to say that myself, but Boeing looking good. Up to 235. I mean, it was looking good. I like that rejection right there. Let's see Nvidia. I'm still waiting for it to break below that support. It broke below this morning at 464, but now it came ripping right back up. I really want to see it get a little bit lower. QQQ is giving me bullish vibes, though. I'm not going to lie. This, setup that's going on here is giving me bullish vibes. This setup that's going on here is like a bullish channel. A very small one. But it is. Let me see if I can clone this thing. Here we go. Look at that. It's not perfect, but see it breaking the channel now? Starting to go up. Looking pretty good. Looking pretty good. QQQ. Getting back to its new high of day today. As long as you don't count pre-market, that is, but hey, thanks, Angel. I appreciate hearing that. Thank you. Corbin feels good. Coffee got me. Nice, Corbin. Apple moving up, too. Makes sense. Let's see. Oh, yeah. Apple looking fire, actually. I had a nice resistance from yesterday morning, posted at 190.30, and it's actually breaking that very well. We talked about this in last night's video. We did just have some economic data points come out too. I'm sure you guys are seeing in Discord. ISM manufacturing prices, PMI numbers were out. Came in right around, I guess, what we would expect. Give me 1 sec, guys. You know the drill. Be right back. Right, guys, sorry about that. Sorry about that. Had to go, you know what I had to go do. So I'm looking at that 190.50 resistance now on Apple for sure. That high of day has those couple wicks extending up there. That is definitely important. If it starts breaking that with some good momentum, man, our overall market will probably start shooting up again. But at the same time, look at Microsoft actually do the exact opposite. Wow. How many times is Mara going to get posted in the chat? Mara. Let's go look at Mara real quick. How is it looking? Really on fire today, up to 1301. Holy shit. Coinbase looking pretty fire too, but not like Mara. Gosh, guys. The Bitcoin mining stocks, Mara and Riot, are really killing it today. Wow, Mara. Huge moves there. See the daily. Damn, Mara. No wonder. Up around 8.7%. Damn, not bad. DraftKings not looking bad either on the daily. Let's go, DraftKings. Coming back alive. Thank God. I was getting worried for a minute. It could still fall over. Trust me, no problem. It could fall over like nothing, but figured it was interesting to look at. SoFi bouncing back. Yeah, SoFi is not bad. That's been an interesting stock lately. I've been eyeing it up. I like this little dip SoFi's been on. I'm pretty bullish on the setup overall here on SoFi. Not bad. How's our friends at Intel? I know this stock's been great. Ooh, starting to reject now. Intel this year, guys, is blowing my mind. This is one stock that whenever I look at it, I actually get a little bit mad that I didn't buy it, because it's one that I really like usually for the long term, but I just didn't buy it on this dip. I normally buy it on like every big dip that it has. I mean, I've been buying this stock since like 2016 and stuff. So like, you know, it's been one of the ones that I've always played, but it does have me just a little bit sad though. Just a little sad considering, well, little sad, I'd say, considering that, you know, it's not up like 100%, but actually, you know what? It might be. Let's see from the low. How much is it up? 83. Oh, shit. Yeah, not 100, but sure damn's close, isn't it? I don't usually like to think like that, like going like, oh, I missed the opportunity or something, because there's always opportunities. Like, people, you could always say that I should have bought this, right? But I just feel like that it's one of those situations right now where I don't know, it worries me a little bit, right? It worries me a little bit. Good stuff, good stuff. Let's see, Shopify today. How are we looking on Shop? Come on now, let's see that Surge bot. Surge better be giving us some fire plays here. All right, Pfizer to the downside. Nice, I'm sure that's a fun one. I could see that one going lower with that weight loss drug news. Meta to the downside too. The power's not huge on these ones, but I do like Meta down quite a bit. It's actually nearing support from this week, right around 322. Come on, Meta. Let's see a nice breakdown there. Oh my gosh, Hunter goes, do you want to practice swaddling on me? You guys are hilarious. Swaddling. Yeah, I do. SLV, let's see gold and silver. Are they going? Nice. GLD looking great there, Xbox. Nice. SLV looking pretty fire too. Wow. Good shit, guys. My contract expires end of December. I was thinking I should probably sell before the end of next week on SoFi. The end of December. How much are you up on it, Xbox? How much are you? Why did I search Xbox? That's I accidentally put in for the ticker Xbox. That would actually be sick if they had an Xbox ticker, but yeah, SoFi looking great right now. I know it's been recovering up a lot on the daily. I've been actually liking it. Yeah, pretty good the past couple weeks. Apple breakout. What the hell's going on with Apple? So Apple's starting to break out. Microsoft is starting to reject really hard. The hell? Very weird day today. Currently only 37 bucks, but you never know what can happen. SLV, I'm up 33. Nice, Xbox. That's what you mean. I see now. Okay, good stuff. Let's see SoFi here, because I think SoFi can go a little bit higher here in the short term. I really do. There's big short-term support, though, like down around 660 to 680, which kind of sucks. I feel like that it could hit there and like start to bounce, which is unfortunate. Got my tea going today, guys. Got the Lady Gray. Corbin goes, after risking my capital and getting some stress, I'm up $1. Nice, Corbin. I'm just kidding. The stress wasn't worth the dollar, was it? All right, Palantir, though. I'll tell you guys, this is actually looking great today. What a recovery by them in DraftKings. DraftKings just tried to reach new highs of the year again today. Like, seriously, what? The hell's going on there? I love it. Looking great, guys. Looking awesome here. Yesterday, I opened up a little UVXY hedge on the side just in case that market started tanking down here. And I'll tell you what, UVXY is sucking. We need to see that QQQ drop a little bit. And then VIX needs to pop up off support down here. Come on, VIX. Do some good stuff for us. Xbox said Square. Are they popping off today? I haven't checked them out yet. Nice. Yeah, Square looking awesome. Okay, I'll take that movement. Nice. What about Zoom? Oh, yeah, trying. We're trying to. Trying to go as well. Yeah, what a move though, Zoom. I actually have an alert set at 69 because it's my favorite number out there. Oh, by far. By far. What a number, right? Elon's favorite, but I do have it set there. If it breaks out, we'll be looking at some calls on Zoom. I really like the setup here. Mike talked about this yesterday. I talked about it as well. It was Mike's setup, and man, looking fire here. Fire, fire, fire. The way that stocks break out of these channels and out of these trends like this is just awesome to see. Awesome. Got to take a little screenshot of Zoomy Zoom here. It's confirming off of the trend. That confirmation is what gives me a huge, huge bullish tendency right here, is the fact that it bounced off of that. Yeah, I love this. I've been waiting on this one for a while, guys, and it's just now finally starting to break it. Now, it is the second break. It broke it one other time and faked out, so I want to keep that in people's mind just in case, but other than that, looking fire. How's this if you draw it out? Okay. Just was curious on that one. Good, though, Zoom. Good shit. Great movement. I honestly think like some calls that expire in a couple months could be amazing on Zoom. Like maybe something in February or March. Let's see. The 70 strike call for February is going for like 370 bucks. Not bad. March is going for 530, 525. I mean, really, guys, that not too bad on some of these. Now they have pretty low volume. So I must say that, but that's a little weird. But besides the low volume, it's not terrible. The open interest is still fairly decent, especially on the February chain. Obviously, when you get to March, it's still decent, but just not like on the closer ones. But still like it. It's a little bit high intraday for a buy, but man, you know, when these stocks start going, they can get on some pretty big runs. Pretty big runs. Love to see that. They're pretty underpriced right now, too. Like, very low in the short term. Hey, how come everyone quit talking about GameStop, guys? I'm surprised. Nobody mentioned the GME. Probably because it went down yesterday, but starting to come back a little bit today. Figured I'd mention it. I know I'm not a big GameStop fan, but, you know, for the next couple weeks, I'll definitely look at it from time to time. Just because it is starting to get that like momentum and hype into it. But I'll try not to look at it. All right, Zoom. There we go. Getting the break of the new high of day. There we are. 68.91 right now. Beautiful. Beautiful. Let's see the daily. Oh boy. Boy, oh boy, Zoom. I might have to FOMO into some shares again. Because I love the trend breaking so much. I mean, I love it. Let's eye some stuff up here. Beautiful. Love it. Come on, Zoom. There we go. Look at that. It's actually right at my 69 alert. I can't believe it didn't trigger the alert. It was really close. I figured, Mike. I figured. That's what I thought. Dell got an upgrade and dropped 10 pesos. Dell. Oh, they had earnings. Alt versus PFE on weight loss. Alt? I've never heard of this one. What the f... Look at that jump up in the short term with Alt, guys. That could be a fun stock here. If this thing starts to really move here over the next couple days, this could be a fun stock. I'm not saying to buy it because it's super risky, I think, but if you're a risky individual, might not be bad. Come on, Zoom. Ooh. The first woman on the Supreme Court died today. Sandra Day O'Connor. That's too bad. Let's look at ZOM and Oxy. All right, starting to trend back a little bit. Ooh, look at that. Right on support with ZOM starting to come up. Let's see CL with crude oil futures. Let me be right back, guys. Let me Let me look at some Zoom real quick. I'm going to buy up some February calls. I'm really liking this breakout, guys. It'll maybe leave yourself some room to average in with how high Zoom is on the day. But, yeah, I really like the February calls here. We'll just go with the 70 strikes, you know? Right around the money, not bad. Wish I could go with something closer, but... swing these for a little bit. Setup's too good. There it is, crossing 69.05 on the Zoom right now. Like I said, it'll probably dip back down a little bit today, but I think come next week we'll be looking a lot better. Be looking fire. Better not be raining today, guys. No rain, please. Let's see. Yeah, it is a little bit. It has a 50% chance here. Damn it. Anytime I want to drive the car, there's rain. Every time. Explain a bit how you get to that decision about February calls on Zoom. Why not December, January, or March? Well, Angel, it really is how long do I want to hold it, right? So I'm going out to February because it's really like I don't want to hold the play for like, you know, I'm not going to, you never really want to hold these until expiration unless you're like way in the money, right? So, what I'm looking at, Angel, is kind of like Zoom here is at a good breakout point. It's starting to run up a little bit, but I still want to catch like an overall move. So, you know, like there might be like a couple weeks of uptrend here, and I'm looking to catch it over the course of like 2 weeks to maybe like a month and a half, right? So 2 weeks to a month and a half. And whenever I see that movement, you have to give yourself enough time. If you just went with the January expiration and you had to hold this into January, that would be very, very unsmart in my opinion, because it's a, what would you say? The expiration is much too close and the theta decay is going to destroy you. And theta decay, for anybody who doesn't know what theta is, it's essentially just a measurement of time decay. So as options get closer to expiration, they decay. And that's just how options work. Now, if the stock keeps going up, it might not decay. It might just not go up as fast or something like that. So, you know, it's not like it's always going to decay, but like you'll still feel the decay, you know, as it goes into that option. Because let's just say Zoom keeps exploding. There's still time decay there. It just, is going up, maybe just the time decay, instead of going up $100, it might go up like 95 is kind of, you know what I'm saying? So sometimes it's not as like big of a deal, but I really want to have enough time. So if I got like the January expiration, it might be good if Zoom goes in my direction right now, but let's say Zoom consolidates. Like, let's just say that it breaks this trend, consolidates, goes down, and then bounces up before, or bounces off it again before flying up. That's kind of a little bit of a worry that I do have. So, you know, when I'm looking at Zoom here, I'm trying to be a little bit safe on the time, just so that I have enough time in the play, because it is a naked, you know, they're naked options, so they're going to be a little bit inherently more risky, you know, than if you did like a call debit spread or something like that. But that's how I get to that, Angel. Now March, how you asked for why not March. March would be a good one too. I was just trying to get ones that were, you know, not like super safe, but then again, not like super risky either. Trying to take like the middle road here on this one. If I was gonna go safer, I would definitely go March or even May or something, but yeah, no problem, Angel. No problem, I'm glad it helped. Where's your SPY going? Let's see. SPY, you know, SPY I'm actually really conflicted on right now. Highly conflicted on SPY. So short term, we're sitting right at this big resistance, and we're having a lot of problems breaking this 459 to 460 area. Like a lot. We're, you know, it's a pretty obvious level up here that we're rejecting off of. Could SPY break this right here? Yes, but until we break this high, I'm not going to be overly bullish on the SPY, especially because I go look at stuff like Apple and Microsoft and other stocks. Like, look at Microsoft coming down right now. Look at Nvidia on the daily, turning over. It's only a matter of time before that overall market starts to come back. Now, I know they're all not falling, right? Like you go look at Apple, it's still doing fine, but on the SPY right now, I'm looking at it down because of that double top. Now, hey, if this double top on the daily chart breaks and we're at 460, it starts running up again, you know, I think that there's a good opportunity up, maybe into the 475 to 480 area for an all-time high retest. But until we see that break here, it's not worth going bullish yet on me, for me, because we're already just up so much. I feel like some of these stocks just are due to pull back, and you know, saying that things are due is kind of stupid, right? It's kind of like playing roulette and red comes out 10 times in a row and you're like, well, red's due, right? Well, it's not really whenever you look at statistics. If you know statistics, if you guys took statistics in college or something, you would know like red on a roulette table is never due. You know, same thing in the market. Nothing's ever really due, but at some point, the stocks get too high and sentiment changes because people have to start taking profit somewhere, right? I think that's kind of where we're at on a few of these stocks. And, you know, it's not like do I think that we're going to crash? No. But do I think that there could be a pullback? Yes. Like maybe 5, 10%, something like that. Red is always due. I know, right? Oh, that's funny, Mason. I'll tell you what, Mason, roulette pisses me off so bad. If I was gonna gamble, I would rather just throw $300 or something just on like one hand of blackjack rather than gamble it on roulette. One hand of blackjack sounds a lot better. I've done it a couple times. The dealers think I'm idiots, but think I'm an idiot. I probably stumbled over to that table. Blackjack's the best. I know, right, Llama? It is. I like roulette. It's fun, but nothing is like blackjack's joy. The joy in blackjack is just so nice. So much fun. I'll say this, though. I keep trying to count the cards, and I'm not very good at it. I actually haven't played blackjack, though, in like... Man, I think it might be like 6 months now or something. Craps, lay 10 or 4, best bet in the house. Yeah, you know, people say craps is good, but I think, like, when you look at stats and percentages, I think even roulette's better, but I'm not sure. Not sure. They all are losing games besides blackjack when you count. Counting cards at blackjack is the only profitable thing in the casino. Truly profitable. Now, people might say, I win, but when I look at percentages is what I'm talking about. Like true percentages, like over the long term with roulette, you might get lucky. But if you truly keep playing forever, you'll probably end up losing more than you win. I don't know about craps. I'll be honest. My buddy tried to teach me craps one time in Vegas, I've only been to Vegas twice, and I tried to get taught craps, and I could not do it. I did not know what was going on. That's hilarious, Manny. Manny has this hilarious gif where he says it's like some guy setting a trap in a stream. It just really got me laughing. I always love that one. All right, good support, though, here on intraday on SPY, sitting right around 455. I've had this level for a while on my charts. Every morning, we make posts and hashtag market analysis, and I actually post my SPY chart with a ton of levels on there. Now, I do like 455 today. I don't have it down as like a major support, but I did post it up at the bottom. Keep an eye on 455, 450, 350, and 454. I'm really watching a couple of these areas here. Like for scalping opportunities intraday, there's opportunities all around. Like if we end up falling under 455, like I think you could trade a pretty safe scalp down to like 454.20-ish or something right around there would be fun. No matter what the gamble is, I'm sure we can all agree, don't gamble like Sam Bankman-Fried. I feel you there, Xbox. Sam Bankman-Fried. SBF, right? Man, that poor guy got destroyed in the court system, I think. That poor man. What a poor guy. Tom Brady's worst nightmare. That's pretty good, Mason. Brady's nightmare. That's funny. When would you consider taking profits off Zoom percentage-wise with the call? Good question, Michael. Sorry I missed your question earlier. I got into rambling on about something, but percentage-wise on Zoom, good question. So I really don't have any percentage on this, and I think that sticking with percentages on profit taking can be a little bit negative, because sometimes people, instead of looking at the setup and like seeing where the stock's gonna go, they worry too much about like, my position has to hit this. So I try not to think about it like that, Michael, but what I'm going to do is eye up a few areas on the Zoom chart. So here's what I'll do. I'll go to the daily chart. I'll make some lines here for us to watch. First off, huge resistance coming up if Zoom breaks out is right around 71. Look at all of these hits. I'm going to circle them all in blue. Lots of hits at this 71 area. I mean, a lot. So, and you can go back even further in time, and then there's even, you know, even more touches here. Let me go back even further. Like right around 71-ish. So I'm going to watch this resistance very, very closely overhead. I think that would be a spot Zoom could get through, though. So what I would look to do is, as it gets to there, I'll probably look to take profits, at least on one or two of the contracts, maybe 3 or 4. And then I'll let it ride up maybe to like 74, 75, which is next major resistance that I see here on the chart. That would kind of be what I do whenever I look to take profits here. Now, if it's super, super explosive, then I think that you could maybe, let it ride up. You might not have to take profits right here at 71. You know, it might just be real explosive and start running towards 74 right away, which we've seen that happen fairly often here. So I'll definitely be watching for these levels though overhead, and I'm gonna be looking to more of take profits here than at a certain percentage or something along those lines. But yeah, I'd love to get up to 74, if not higher than that, within our allotted amount of time here. And since we have the February expiration, like for example, guys, we're not gonna want to hold this play anything past 1 month until EXP. So like for example, today's date's December 1st. Like you would not want to hold this past January 16th, essentially. You would not. At least I don't. I won't. I might roll it out if I do want more time, or if I do want to keep holding, I might close the February ones and maybe buy like the March or May if I do want to keep holding. But for the most part, I'll just let it ride. Broncos Nation, let's ride. You know, Russell Wilson, guys. We're gonna do the Russell Wilson on this one. There we go, though. Retesting the high of day again on Zoom. I like to see it. This thing is explosive. Usually don't see moves like this on the daily chart with stocks. I mean, just the breakout, the sheer setup. We've been waiting for it for a long time. I've been very patient on this one, waiting for the break. Finally got it coming. Better not fake out on us, which I doubt it will at this point. It's looking pretty good, but... yeah, I'm thinking 74, if not even higher, towards 80 would be preferred. So I'm not saying just to like take all your profits right here. Like definitely always have a couple runners, you know, or leave a couple runners to still run, but let's see a zoom. And once you guys get up in the profit, you know, you could always move your stop loss up to break even and stuff like that. That way you don't get too worried about it, right? Then that way you always know I'm getting out at break even. I'm not losing on this one anymore, right? Like maybe once it gets to 74, move that up to break even. Mr. Unlimited, no, I have not seen it. I'll need to... Is it going to get me copyrighted? Mr. Unlimited, let's see. Now I see it. I didn't know that was his name. I didn't know that was his name. Broncos Nation, let's ride. Yeah, guys, here we go. Oh, hang on. This stupid... You gotta, like, turn the volume up on, like, YouTube itself. It's kind of dumb. Alright, now it'll do it. Watch this.
Ride. Let's ride. Let's ride.
Broncos.
Let's ride.
Perfect. One more time. Broncos country. Let's ride.
Broncos country. Let's ride. Broncos country. Let's ride. Broncos country. Let's ride. Broncos country. Let's ride. Ride.
That's funny as hell. It's Broncos country. I had it wrong, damn it. I was close enough, though. All right, SPY rejecting at 456.30. Coming down pretty damn good now. Looking pretty fire. Big rejection there on SPY. I'll be honest, now the setup's kind of looking a little bearish on me. I think it looks like a little bearish intraday pattern now. Seeing the QQQ. Let's go to NVIDIA. NVIDIA is actually coming up off its low. That's stupid. The market finally falls. NVIDIA goes up. Probably because Apple and Microsoft must be falling. Yeah, Microsoft just is not stopping today. They hit new all-time highs recently, and I guess... holy guacamole. Look at that drop on the daily chart, guys. Awful. Terrible movement. Man, Microsoft, not good. Not good. I'll take the zoom movement, though. How's our friend at DraftKings? Okay, still consolidating. Gotta check in on Disney, the pen. Oh, Disney, what the... Come on. I'm gonna get the Little Mermaid to come kick your ass, Disney. Come on. Get up there. I know people have a lot of hate towards Disney lately, and trust me, I feel the hate. I feel you on the hate. But long term, there's no stopping them. No stopping them long term. How's Ford? Nice, coming back up a little bit today. General Motors trying to go. Tesla looks awful again. Poor Tessie, guys. Oh, I forgot about the intraday wedge earlier on Tesla. Damn it. It started breaking to the upside pretty good. Now it's actually looking a little bit bearish on the chart. Huh. Interesting here. Come on, QQQ. Nice, ripping back up pretty well. See the ZM, nice. 69.30 now, new high of day break. That's awesome to see. Let's go. Good shit, Zoom. Good shit. Asana is doing great today on the watch list. Wow. Now the watch list looks great. Earlier today it was awful looking, but love this movement here. Let's go. Let's ride. Oh God, I'm dying. I'll be right back, guys. Ha, Corbin, that's hilarious, man. If it's a boy, Tom's gonna name him McRib. If it's a girl, UVXY. Shit. Not UVXY, man. That's too far. No, I'm just kidding. Oh, shit. That's funny. Hopefully UVXY can start doing a little bit better today. It's kind of sucking. Gonna be real with you. Doing terrible. You know what else is doing kind of shitty lately that's honestly been pissing me off is NIO. NIO has just been stuck. It's stuck down here. It's almost right at the $7 support. Definitely worrying me here. I'm gonna have to place an alert at $6.95, damn it. Not happy with this one, Zoom. Or NIO, I mean. Zoom. Right at support. Definitely not making me happy lately. Thank God the long-term accounts have been doing great. Dude, I kind of feel stupid. I almost don't even understand Corbin's. Oh, I don't even understand the humor behind it. Evernight, I actually am getting that. That is hilarious you said that. Look at this. I've actually looked it up. Kids, bat, Battery. Powered. I swear I've looked this up. Hellcat. Right here. Here's... I was hoping to get a B5 blue one, but here we go. Like, bam. That's pretty funny, guys. That is pretty good. I'm definitely gonna have one of those, for sure. Wait, you have a parent's remote control? No way. You mean I can control it? Oh, now I'm even happier. This is sick. Hopefully they still have them in a few years. I wish they had one in the blue I had, though. Man. Hey, here we go, here we go. A pink one. That would go better for her. Nice. That's pretty cool. That's too much fun, guys. It sings music? Oh, God. All right, Powell should be starting in about 10 minutes, guys. I will have him live if I can. Ten minutes out from the conversation with Spelman College president. Look at that. It's actually on right now. Let's bring that up on YouTube. Bam. Can't wait to see what they have to say here. Cameron said, do you have a Hellcat? Cameron, you didn't know that? I'm just kidding, Cameron. Yeah, I do got one. Yeah, I do, Cameron. I got one. Sorry about that. My sister sent me a text real quick, but yeah, I do got one. I got a well, it's an old one, you know. I didn't buy like a brand new one, so but I did get a 2015 B5 blue. I'm trying to get the pictures up here. Can I access like my cameras on Apple or my pictures on Apple with like... Let me see if I can get this up here. I'm trying to access like my iCloud on the computer so I can show you guys it. Hey, here we go. I'm figuring it out now. All right, we'll do a passkey. There we go. Perfect. Here we go. Here we go. Got you guys. Hopefully it has the videos too. That'd be sick. Get to Spy again. Spy's coming up now pretty hard. Nice. Spy moving. Zoom's still moving too. Beautiful. Here we go, guys. Here we go. Here we go. It's pretty cool. Here we go. Check them out. It sounds a lot better in person, I promise. The brakes. There's one with the cat on it. Like, literally the cat on the Hellcat. I like that. I thought it was a cute little picture that we did there. It was in the rain one time. Don't get too mad at me. There it is in the parking lot. My new license plate. Don't tread on me with the cat. Some people say, Tom, don't you want to hide your license plate? You know, if somebody really wanted to find out where I lived, I think that they'd find it, you know, if they really wanted to. I love this car, though, guys. It is a badass car. What is this? This thing doesn't pass emissions either. But I think I heard something funny that time, but Powell should be up here in about 5 minutes, guys. 5 minutes on Big Daddy Powell. QQQ went choppy right here. It's actually right at resistance. 387.30, 387.50. Nice. Cameron has an octane red wide body. Beautiful, Cameron. I love to hear that. That's sick. That's a cool color, too. Nice. That's awesome to hear. What year do you got, Cameron? I will say this, mine has a whole bunch of shit done to it. It's like the furthest, it's like the furthest from stock you can go without changing the supercharger. Nice, a 2018. Nice, nice, nice. If I was to go back today and buy one, I would definitely get a newer one than a 2015, but... Grab the 70 zoom calls. Nice at 3.95. Nice, Ryan. Nice. Remember, it's going to be a little bit of a hold here with Zoom, remember? It might go down a little bit intraday or something, but we just have to trust this setup. We have to trust the breakout. And one big thing here, guys, huge, huge piece of info. This confirmation is what we really got to trust right here. The way that this red wick touched right on that trend before moving up, that is what we got to trust. That is a big, big part of the setup. If there was no confirmation, it'd be very difficult to enter because you would probably think that it would fall and try to confirm off of it at some point after a few red candles. So C5 RS6 Avant. I do love RS5s, RS6s, RS7s. Man, they are sick. Sick. C5, RS6 Avant. Oh, wow. Is that one yours? That's pretty good. I like the way that looks. It reminds me of the body styles from back when they had like those, like the E46 M3s and stuff. Kind of reminds me of like an E46 M3 type of body style, but... Oh, nice! Look at this, guys. This is, I think this is Cameron's car. Nice one, man. Wow, I love the way that looks. Mazda 3 hatch. Hey, I have a Ford Focus ST hatch, man. Pretty cool piece of history, Ryan, if you did not know. The Mazda Speed 3 hatch, that car is actually where the Ford Focus ST and RS originated from. If you didn't know that, Ford actually bought Mazda, I believe, or at least bought certain parts of it. And that's exactly where the Ford Focus came from, Ryan. At least the cooler Ford Focuses that we know. Nice, he put it away for the winner. What kind of indicators you used and what EMA settings? So, Walter, I used to use an EMA ribbon. I used to have a lot of EMAs on there, but the ones I really like are the 100 EMA or SMAs. When I used to use SMAs, but you know, to each their own. You could argue about EMA versus SMA all day, but I would rather go. I use the 100, 200, 300, 500, and 1000 on my SMAs. I plotted all of them, and I also plotted a 500 EMA as well. But you know, like I said, I don't use them anymore because I believe that they were helpful, but at the same time, I also believe I got a little bit too much into them, you know, trusted them a little bit too much, etc. I found out for like longer term plays, it's not like that big of a deal on those, so more for shorter term stuff is what I would use those for. As far as indicators, I don't really like too many. Like, for example, I don't use MACD, I don't use RSI, I don't use anything like that. I just use price action and candlestick patterns. I really try to find trends, kind of like with Zoom, how we're on like a daily trend right now, and we're breaking out above it. That's kind of what I love, these types of setups. I really like finding like trend breaks or stuff where like QQQ, like how it was like in a big channel, right? Like maybe trading it down off the top of the channel or buying it up off the bottom of the channel or something like that to me is so much better. Now I know that a lot of people out there use indicators and MACD and RSI and stuff like that, so I don't mean to put them down, but you know, keep in mind, here's what I have to say. If you see an indicator that's super popular, and let's say it's really popular with retail traders, right? So that would be people in Discord, people yada, 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 right? If you see a lot of people using it, you should know that most people lose. So I would try to do what most people don't do. But hey, Powell's speaking, guys. Let's go.
Administrators, faculty, friends of the college, individuals from institutions throughout Georgia, and the remarkable community of Spelman, welcome.
This isn't Powell.
I am
I'm just kidding.
Marinette Holmes, Chair of the Department of Economics here at Spelman, and it is a privilege for my department to co-host this momentous occasion.
Let me boost the
Today
volume.
marks a historic event in Spelman's 142-year history, the first visit by a Federal Reserve Board chairman. This is a yes. Yes. This is a tremendous honor for our institution. Founded in 1881, Spelman has been training women to take leadership roles in all sectors of society. Our very founding was an investment in the potential of Black women and girls to use their education for the good of society. Today, we are very proud of the return on investment. Thousands of graduates represent the institution across this country in all areas, and given the occasion, we are especially proud of the impact Spelman women are having within the economic and financial sectors. Today's fireside chat between Federal Reserve Board Chairman Powell and Spelman's President, Dr. Gale, promises to be an insightful discussion on crucial topics such as the post-COVID economy. Under Chairman Powell's leadership, the Federal Reserve has placed a high value on diversity, recruiting a record number of women and persons of color, holding seats on the boards of the Federal Reserve banks, including the bank here in Atlanta. We are delighted to acknowledge the most diverse Board of Governors in the agency's 109-year history, including Spelman alumna Governor Lisa D. Cook. Yes. And let's celebrate her for her achievements, and thank her because the Economics Department currently houses the Lisa D. Cook Scholars, a scholar program designed to address the scarcity of Black women pursuing graduate degrees in economics. And I am now pleased to introduce one of those scholars, Lisa Williams, class of 2025 from Novi, Michigan, a junior economics major with a minor in management and organization, who will introduce today's speaker. And once again, welcome to this historic event at Spelman College.
Good morning, everybody. Jerome H. Powell first took office as the chair of the Board of Governors of the Federal Reserve System on February 5th, 2018. He was then reappointed to office and sworn in for a second term on May 23rd, 2022. Chair Powell also serves as chairman of the Federal Open Market Committee, the system's principal monetary policy-making body. Chair Powell has served as a member of the Board of Governors since taking office in May 2012. He was later reappointed and sworn in during June 2014 for a term ending January 31st, 2028. Prior to his appointment to the board, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C., where he focused on federal and state fiscal issues. From 1997 to 2005, Chair Powell was a partner at the Carlyle Group. He served as an assistant secretary of the U.S. Department of the Treasury under President George H.W. Bush, with responsibility for policy on financial institutions, the Treasury debt market, and other related areas. Prior to joining the Bush administration, Chairman Powell worked as a lawyer and an investment banker in New York City. In addition to service on corporate boards, he has served on the boards of charitable and educational institutions, including the Bentheim Center for Finance at Princeton University and the Nature Conservancy of Washington, D.C. in Maryland. Chairman Powell was born in February 1953 in Washington, D.C. He received a bachelor's in politics from Princeton University in 1975 and earned a law degree from Georgetown University in 1979. Helene D. Gale began serving as the 11th president of Spelman College on July 1st, 2022. President Gale previously served as both president and CEO of the Chicago Community Trust from October 2017 to June 2022. Under her leadership, the trust adopted a new strategic focus on closing the racial wealth gap in the Chicago region. For almost a decade, President Gale served as both president and CEO of CARE, a leading international humanitarian organization. As a pediatrician and public health physician with expertise in economic development, humanitarian efforts, and health issues, she spent 20 years with the CDC, working primarily on HIV and AIDS. A previous member of the Federal Reserve of Chicago's board, President Gill currently serves on both public company and nonprofit boards, including the Coca-Cola Company, Organon, Palo Alto Networks, the Bill and Melinda Gates Foundation, Brookings Institution, New America, and the One Campaign. She is also an inaugural member of President Biden's Advisory Council on African Diaspora Engagement in the United States of America. President Gale is from Buffalo, New York. She earned a bachelor's in psychology at Barnard College, a doctor of medicine at the University of Pennsylvania, and a master's in public health at Johns Hopkins University. She is a full professor at Spelman College, a recipient of 18 honorary degrees, and also holds faculty appointments at the University of Washington and Emory University. Please join me in warmly welcoming Federal Reserve Board Chairman Jerome Powell to the stage as he offers his remarks, and afterward, we look forward to President Gale joining Chairman Powell for an engaging discussion on navigating pathways to economic mobility.
Thank you for that very kind introduction. Thank you, Dr. Holmes and President Gale, for inviting me here. It's very exciting to be here. And I'm fortunate to have been accompanied from Washington by a very distinguished graduate of Spelman College, class of 1986, and a member of Delta Sigma Theta. My Federal Reserve colleague, Governor Lisa Cook. I'd say there's no greater testament to Spelman's historic legacy than the achievements of outstanding women like Governor Cook. One part of that legacy is Spelman's tradition of promoting education in STEM. Governor Cook's research highlights the key role of such education in preparing individuals to be inventors and innovators who can generate ideas that will add to our body of knowledge, increase productivity, and generate higher living standards over time. Her work is just one example of how Spelman women continue to make historic contributions in science, the arts, technology, medicine, and other fields. I look forward to our conversation, and I thought I might frame it up first by talking about the Federal Reserve's ongoing actions to promote a healthy economy and how those actions relate to questions that students in this audience might be asking about the future. For example, I imagine students are wondering what kind of job market and what kind of economy you'll be entering when you complete your education. To start, Congress assigned the Fed the dual mandate goals of maximum employment and price stability, and both of these goals are essential aspects of a healthy economy. Congress also gave the Fed a precious grant of independence from direct political control to allow us to pursue those goals without consideration of political matters. Other major central banks in democratic societies around the world have similar grants of independence, and this institutional arrangement has a strong track record of producing better policy outcomes for the benefit of the public. So let me go to the two dual mandate goals, and I'll start with maximum employment. I'm glad to say that by many measures, the conditions in the labor market today are very strong. A couple of years ago, if you go back, the pandemic was receding and the economy was reopening. The number of job openings grew to greatly exceed the supply of people who were available to work, leaving there a widespread shortage of workers. Today, labor conditions remain very strong, and the economy is returning to better balance between demand and supply for workers. The pace at which the economy is creating new jobs remains strong and has been slowing toward a more sustainable level. That gradual slowing has come in part due to the efforts of the Fed to slow the growth of the economy to help reduce high inflation. After declining sharply during the pandemic, the supply of workers has bounced back as people have come back into the labor force and as immigration has returned to pre-pandemic levels. Partly because of that labor force growth, the unemployment rate has edged up over the second half of the year, although it remains historically low at 3.9%. The increase in labor force participation has been particularly strong among women in the prime working years of ages 25 to 54, which surged to an all-time high earlier this year and which remains high and above pre-pandemic levels. Wage growth remains high, but has been gradually moving toward levels that would be more consistent with 2% inflation over time. So real, which is to say inflation-adjusted wages, wages after inflation, are also growing again as inflation declines. Turning to price stability then, the second part of the mandate, we have a longer run goal of 2% inflation, and after running below 2% for over a decade, inflation increased sharply in 2021 in the United States and in many other countries around the world. High inflation imposes a significant hardship on all households and is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Beginning in early 2022, we reacted forcefully, raising our policy interest rate and decreasing the size of our balance sheet to help slow the economy and bring down inflation. And inflation has now declined to 3% over the 12 months ending in October. But if you factor out energy and food prices, which tend to be volatile, you get what's called core inflation, and we look at that too. That is still on a 12-month basis 3.5%, well above our 2% objective. However, over the 6 months, now looking at more recent data, the 6 months ending in October, core inflation is actually running at about 2.5%. And while these lower inflation readings of the past few months are welcome, they're highly welcome, that progress is going to need to continue if we are to reach our 2% objective. The high inflation that we got beginning in 21 initially emerged from a collision between very strong demand and pandemic-constrained supply. And the normalization of supply and demand conditions that we've seen has played a critical role in the disinflation, the coming down of inflation so far, as has the substantial tightening of monetary policy and overall financial conditions over the past 2 years. The strong actions that we've taken have moved our policy rate up and well into restrictive territory, by which we mean that tight monetary policy is putting downward pressure on economic activity and inflation. Monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening likely have not yet been felt. The forcefulness of our response to inflation also helped maintain the Fed's hard-won credibility, ensuring that the public's expectations of future inflation remain well anchored. Having come so far and so quickly, the FOMC is moving carefully forward as the risks of under and over tightening are becoming more balanced. As the demand and supply-related effects of the pandemic continue to unwind, uncertainty about the outlook for the economy is unusually elevated. Like most forecasters, my colleagues and I anticipate that growth in spending and output will slow over the next year as the effects of the pandemic and the reopening fade and as restrictive monetary policy weighs on aggregate demand. The FOMC is strongly committed to bringing inflation down to 2% over time and to keeping policy restrictive until we are confident that inflation is on a path to that objective. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease. We are prepared to tighten policy further if it becomes appropriate to do so. So we're making decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. And that's an overview of what my colleagues and I at the Fed are working to accomplish. The bottom line, if you're a student, is that we've made considerable progress in reducing high inflation while maintaining a strong labor market, with a lot of opportunity for new graduates. The unemployment rate has moved up a bit, but it's still very low by historical standards, and by many measures, it's a great time to start your career. You'll face challenging decisions soon about what professions to enter and what companies and other institutions to work for. Of course, some of you will become entrepreneurs, but each of you has already made one really good decision, and that's coming here to Spelman. Whatever opportunities and challenges emerge, education will continue to be a key to success. Higher education is an investment and not just of money. You're investing your time and great effort to gain knowledge and skills that are preparing you for successful careers. Your success will make for a stronger economy. For our part at the Fed, we're doing our best to foster an economy that gives you the best opportunity to succeed. And with that, I will hand it back to you, President Gale. Thank you.
Well, thank you so much, and particularly thank you for that word of encouragement to our students. Sometimes in the midst of what has been a turbulent economy, it may seem a little daunting, but as we say at Spelman, we are undaunted. So, and I also want to thank Lisa Cook for all that you did to make this visit happen, but also for all that you do to represent this school so well. So thank you so much. And to your colleague and our friend, Raphael Bostic, who is the president of the Atlanta Fed, it is an honor to have you here with us. And our colleague from Georgia Tech, Kay Husbands-Fielding, thank you so much. She's been our co-collaborator in building this. So let me just start. And before I dive in, maybe just start with a few comments about you, or a few questions about you. How did you get here? Okay, I'm a doctor. I know how you really got here. But you're not an economist. You are trained as a lawyer, did investment banking, did some other stints in the public sector. What was your journey, and would the young person, like the young people who are sitting out here today, be surprised at where your path took you?
So my path was, I'll start with when I graduated from college. And I grew up in Washington, D.C., and the whole Washington, D.C. political scene is there, but my parents and my family were not part of that. We were just people who lived in Washington. My dad was a lawyer. But when I graduated from college, I didn't have a plan. I hadn't thought it through, but I did have one thought, and that was that I wanted to be somebody who had a private sector career, but who also came in and did public service from time to time. And I was thinking of people like Cyrus Vance or George Shultz, who had, important private sector careers, but every 8, 10, 12 years they would come in and serve in the government for a while. That's a unique feature of the U.S. system. You don't really see that that people can have both of those. And oddly enough, that's kind of what happened. So I wound up going to law school. It wasn't that I was dying to be a lawyer, but that was an obvious thing. My dad was a lawyer. I practiced law for just a few years, and then I moved into investment banking because we were working with serving investment bankers, and I could see they were having more fun than we were. So I moved into investment banking, and I really enjoyed that. It was I worked on a lot of mergers. It's a very exciting thing to do. Did that for quite a while. After doing that for a while, I had an opportunity to do public service, and I did move to Washington and serve in the Treasury Department as an assistant and undersecretary under President Bush Sr. Then I moved, so I did that. Then I went back into the financial business and was a partner at a big private equity firm for a while. And now here I am back in public service. So what would you take out of that? One, it is a real... It's such an honor to do public service, and if you have a mainly private sector career and you want to give back through public service, you can do it in this country. And I think I would think this, but I think it's important that people in government positions, at least some of them, have had the experience of being in the private sector. At the same time, I think being in the private sector, I think, is informed by also having worked in the public sector. So those are some things. So that's how it all happened. It was pretty unpredictable, but I was willing to change careers and pay the price. It'd pay the price of having to learn a new field. I had to do that over and over again, but it was worth it.
Yeah. So curiosity is probably another one of the things that spurred you on, which is one of the things we talk to students about all the time. Now, as a leader, you get a lot of high marks. This year's word of the year in Merriam-Webster was authentic. And people often talk about you as being an authentic leader. Could you talk a bit about how you see your leadership style? And authenticity is a tough thing to pull off when every word that you say, people hang on to. So how do you play the role of an authentic leader with such a very, very difficult, challenging job?
So the Fed, I stepped into a role. The Fed does so many things well and right, and the people I succeed are such heroes, really, and so successful and so good at what they did. So, but I think when I think of myself in that way, I'm kind of a more informal. I'm a relatively informal person, and I really do think of getting to good decisions. Part of it is just having a lot of really smart people around you, like President Bostic, like Governor Cook, hearing what they think, and hearing a bunch of different views, and a little bit crowdsourcing thinking about issues, and then coming to a decision after that. That's a very comfortable decision. So, but that requires you to really hear what people are saying and understand their arguments. So that comes naturally to me. I also I felt that it was important that we substantially increase our outreach to Congress, which has oversight. In our system of government, it's Congress that has oversight over the Fed. And so my colleagues and I spend much more time than we used to going up to the Hill and talking to them and listening to them more. And I think that really pays off. They understand that we're a non-political agency, doesn't use talking points. We're just trying to do our jobs and stick to our jobs. And I think even if they don't agree with what you're doing, and even if it's very difficult times, they know that you're doing your very best, and they trust you to do that.
So on that, one of the things I think you have done well, and I would argue your predecessor was good at this as well, is trying to decode the Fed a bit. It is, for many, still a mystery, and you started talking about the dual mandate and what really is the Fed's responsibility. But you don't have a lot of tools. You have a limited set of tools, if you will, to have an impact on that. But people think that the Fed can do all things for the economy. Could you talk a bit about where your responsibilities and what you are able to do end, and where others need to take the next step and move things forward, and particularly this interface between monetary policy and fiscal policy, and how that works in the real world?
Let me start by saying the things that we actually do. So the thing that I talked about was monetary policy. So we use our tools to foster maximum employment and price stability, two equal goals in the law. And that involves raising interest rates and using our balance sheet to either slow gradually or speed up the economy to move the economy toward those goals. We also, though, regulate and supervise banks. We have a broad responsibility to support financial stability to the entire financial system, which we do really through our liquidity tools. That was the original purpose of central banks, was to be there with liquidity, with cash when bank runs emerge. And if there's a facility there that exists, then the bank run doesn't happen in the first place because people know they'll get their money. We also play an important role in the payment system. So we have pretty broad roles. People do expect things of us that we don't really do, and it is really important to respect the line. Most things in our system of government are and should be assigned to the elected branch. Nobody elected us to do things. We're appointed to do specific, narrow, really important things and stick to those things. It's the elected branch of people. They've stood for election. The president has, the Senate has, the Congress has, and it's very important to not walk onto their turf, because those things are consigned to the democratically elected branches. Very few things are assigned to an institution like the Fed that has the protections I mentioned. We serve long terms. We can't be fired except for malfeasance. And Congress would have to pass a law to reverse one of our decisions. No one can do it. So we have to respect that independence by sticking to the jobs that we have, even though it's very frequent. When I testify, which I do a lot, we had a senator speak to us at dinner the other night, and he pointed out that whenever they have me or a Fed chair in the chair testifying, they always try to get us to support their fiscal policy.
Right.
Raising taxes, cutting spending, all those things. And we just can't do that. We have to stick to what we do and stay out of politics. And that's what keeps the Fed independence. And it's what enables us to be that rare thing in Washington, which is a non-political agency that is respected by both sides, where they'll give us the room, they'll criticize us publicly, but they'll give us the room to do our jobs. And our jobs are really critical for every American.
Yeah. And that nonpartisan and people believing in that is so important. There are things that you can do specifically as the Fed, and you talked about them, things that you can't do. But one of the other things that you have as the chairman of the Federal Reserve is the bully pulpit. Could you talk about how you have used that and where you think the limits of that, where is that useful, and what are some of the kinds of things that you use your bully pulpit for? That's
a very challenging subject because, of course, I have many opinions that stray far beyond our, and all of us do, far beyond our narrow mandate. So the occasions for addressing topics that are not precisely our mandate have to be very few and very selective. So Fed chairs have traditionally been willing to say about fiscal policy, for example, that the U.S. federal budget is on an unsustainable path, meaning that the debt is growing substantially faster than the economy, which in the long run is by definition unsustainable in the long run. But we don't get into calling Congress out or telling them how to balance how to bring down the deficit, and that we don't do that. And I stay out of that because we're not fully achieving one of our major goals right now, which is the inflation goal. So, and Congress has oversight over us, not vice versa. But there are occasions when you have to say something. So, and we did. We were one of many public and private organizations that had to speak up about the George Floyd incident and in that very extraordinary moment in our history. And we did. And I wouldn't take that back. But we don't want to be commenting on political issues except in the rarest of circumstances like that one.
Mm-hmm. We talked a little bit about this intersection between fiscal and monetary policy. I think COVID is a good example of how both the Fed as well as the administration and Congress really put extraordinary measures in place to be able to, as best as possible, control what was a very challenging economic situation. What have you learned from that? What were some of the best practices? What are some of the lessons learned from what was an extraordinary time?
It's tempted to start by saying that we'll need some more years of perspective to really look back and have a better answer. But I'll give you a sort of in the middle of things, tentative answer. So, I'd start with the fact that the U.S. economy has really been the star performer in the world since COVID. And so, we've had higher growth, we've had a stronger labor market, we actually have had inflation coming down now faster than most other economies. So basically, compared to other countries, we've done well. Looking back, the economy got stronger much faster, I think, than we expected and than most people expected. If you think about, if you go back to the time of COVID when it was actually hitting, in the first half of 2020, you're looking at a situation where the economy around the world is closing, where we don't have any idea how long it'll take to get vaccines, where we don't know how we will reopen the economy. If you can't get vaccines, we didn't know how lethal the disease was going to be. So there were real possibilities that you could be in a longer-term situation where you just couldn't get the economy back up to full speed. We just didn't know. And so Congress acted, with no dissents. Imagine that. No dissents passed the CARES Act, which literally put trillions of dollars of potential lending power in our hands. It was so big that we didn't have to use it. The financial markets were kind of closed, and they reopened without our having to use this authority. So we made very few loans in the end. It was amazing. But so if you look back on that, what you know now that you didn't know then was that the economy really did recover much more quickly and much more forcefully than we thought. And of course, you would have acted a little bit differently, knowing that. But overall, we'll have to judge this with some over time, looking back over time, remember how extraordinarily unusual, unique the circumstances were. We hadn't had a pandemic in 100 years. No one knew what to do. At the very beginning, there was a question, well, why is the Fed even focusing on this? And then, if you remember, there was a very small stimulus bill that couldn't pass before, and then 2 weeks later, the CARES Act is passing with all this. So it was a moment of great uncertainty and learning.
And so we're still probably in a moment of a fair amount of uncertainty, partly because the economy isn't acting as might have been expected. So sitting now, thinking forward, to the extent that anyone can prognosticate, what are some of the lessons, because of what we went through with COVID, that might help us think about where we need to go, even though things are a bit unpredictable still?
The economy has repeatedly surprised us and all other forecasters. It's so if you go back a year, not many people, and I'm not aware of any people who forecasted that we would have quite the level of strong growth that we have had in 2023, around 2.5%. A labor market that's still been creating millions of jobs, and yet inflation beginning in June coming down, very meaningfully. So coming down significantly. So, and those are all good things. All three of those things are good things. So we've been surprised on the upside this year. In 2022, when we were raising rates very rapidly, it didn't seem like we were getting any payback from that, but we really did get a lot of payback this year, and we also got the unwinding of those pandemic effects that I talked about. So that's people dropped out of the labor force, and they didn't come back in 22, and then they did come back in 23, and also immigration picked up. So all that's happening. So looking ahead, once again, we're still in a place where there is there isn't any experience with year 3 of the pandemic recovery, the last time we had a pandemic. It's just unique. But so if you just take on board what I said about where the economy is and where policy is at a restrictive level, meaning it's holding the economy back. Inflation is still running well above target, but it's moving in the right direction. So we think the right thing to be doing now is to be moving carefully, thinking carefully about how things are going on, letting the data tell us what the story is. The data will tell us whether we've done enough, whether we need to do more, and that's what we're doing. We're moving. I would characterize it as moving carefully. Yeah,
and kind of taking it based on circumstances by circumstance.
Let the data, reveal the appropriate path. We don't need to be in a rush now. Having moved, quickly and forcefully, we're getting what we wanted to get. We now don't have to. We now have the ability to move carefully.
So, probably my last COVID-related question, but clearly one of the hallmarks of the COVID economy was how globally interdependent we are. Could you talk a bit about your relationship to the other central banks and how during times like that you work together? What are the ways in which you balance each other, and just a sense of how we, as the United States Central Bank, collaborate with others?
Yes. So the central banks meet 6 times a year in Basel, Switzerland, just the central banks, not the elected governments, not the finance ministries. And I didn't, that wasn't part of my world before I was chair. But so we don't issue communiques. We just talk about, we go there for 3 days and we just talk about what's going on in economies around the world. And also they're cross-cutting issues that we deal with, like how's inflation going, and all the things that matter for the economy, what's happening in labor markets, what's happening with monetary policy. So that's enormously informative. And as you pointed out, nothing proves how global the economy is better than the pandemic,
crisis,
right? I mean, It was global. During the pandemic, I was in extremely regular, often more than once a day, with other heads of other major central banks by phone. We were the only one. Remember, at the time of the global financial crisis 15 years ago, there was plenty of room to cut interest rates. That was not the case. Our interest rate was really the only one that was far enough above zero that we could meaningfully cut it, which we did. Mm-hmm. But nonetheless, we were always talking, the major central banks, we're always talking about what's going on, learning from each other and that kind of thing. And it's very important because when there's an international crisis, you need to know the people you're working with, you need to trust them. And by the way, this is very much replicated at the staff levels between the major central banks because a lot of the, when there is a crisis, a lot of the knowledge about what to do and how to do it in our very complex financial system, in the plumbing of it, that rests with the staff as well as with governors and Reserve Bank presidents. But the staffs know each other well. There's a seamless web around the world of people with all of that knowledge, which in a crisis, to see them come to work and do what they do is truly amazing.
Do you feel like, having gone through that crisis together, the system of central banks is working even closer together than before?
I think we don't have the ability to, we don't we don't collaborate on. We each serve a domestic mandate, right? Our mandate is to work for the people of the United States. But yes, I think there's a world where we really understand each other and know what we're doing. The dollar is the world's reserve currency, and there are dollar funding markets around the world that are very important for our economy. So we support the dollar as a reserve currency by we have 5 standing swap lines, and we actually opened up 9 additional ones with central banks around the world to support the role of the dollar. It's enormously important in relieving financial stress, and both in the global financial crisis and during the pandemic. So we're very mindful of international economic flows, and it's a critical part and a much bigger part of the chair's job than I would have thought watching from the seat of a governor.
Mm-hmm. Let me talk about an issue that is near and dear to my heart, and I think is also a big concern for many people here in Atlanta, and that's wealth inequality, and particularly the racial wealth gap, which in Atlanta is, I think we're ranked number 4, 2, 3, or 4. I don't know, Raphael, where we ranked number. We're up there in terms of wealth inequality here in the Atlanta region. Obviously, there are some things that the Fed can do to impact that, but also there are also things the Fed cannot do. I know it's something you have talked a lot about. Your predecessor, Janet Yellen, also talked about that. Could you speak to wealth inequality, thoughts that you have about the ways that the Fed can and cannot be helpful? And I say that also thinking about some of the critique that people have around bank regulations and how that may or may not play into the ability for low-income populations to get access to credit and important things like mortgages and credit for starting businesses. So bottom line, wealth inequality, what can the Fed do? What can the Fed not do? And are there more things that you'd like to see happen to make that less of an issue here in this country?
So one of the things that we do is just really part of what enables us to do all of our jobs is we're careful students and we hope deep, thoughtful students of what's going on in our economy and in other economies. But one of the things that's been going on in our economy for close to a half century now is this rising inequality. And so the first thing that we do is we collect and publish a tremendous amount of data on this with the national accounts that we do, with the survey of consumer finance and many other areas. If you go to our website, there's an awful lot of data that we collect and put out about disparities in income and just income levels and by all different kinds of categorization. So we're a source of data, a big source of data on our website. The second thing I'll say is the thing that we can really do, there are 2 things that we can really do with our policy that matter. One of those is to enforce the fair housing laws. So we have powers to enforce fair housing laws. Not all of those powers, they're shared around the bank regulators, but that's an important one. The second one really is, and maybe the single most important thing we can do, is if you look back at the very long expansion that ended with the pandemic, longest expansion in recorded U.S. history, 10 years and 8 months. What started happening in the last 3 years was most of the gains were going to people at the lower end of the income
Right.
spectrum. The gap between black unemployment and white unemployment was at historic lows. And there was by the way, the economy was not overheating or anything like that. We're looking at this and thinking, this is so good for the United States, so good for America. And it can go on, it can keep going, and very beneficial. So the thing we can do is use our tools to get back to, it amounts to this, an extended period of strong labor market conditions. We know what that does. That you had companies, we heard the stories like this, companies were going into prisons and finding people who were not going to get out for a year or so, and meeting them and starting to train people and get them, because there just weren't enough workers. So very beneficial, positive things like that were happening. You asked about, the other thing is, we don't really have, it's the elected branches of government that really have the tools that can address these questions of inequality, and that's around education and all the things, tax policy, all those things are really not in our hands. But the tools that we have, we will use. I don't think of bank regulation as being, the point of bank regulation is to have banks be safe and sound. When banks aren't safe and sound and they collapse, they hurt. We saw this in the global financial crisis. It's really, really damaging to the broader economy. You had very high unemployment, and at that time, a very painfully slow recovery, because when the financial system is damaged the way it was, the economy was just going to grow. It grew very slowly for 10 years. It did grow for 10 years, which was great, but we never saw that 3, 4, 5% growth year that we wanted to see.
You mentioned earlier the employment mandate, and that obviously feeds into issues of income inequality and to a certain extent wealth inequality. And the Fed has recently gone from saying just maximum employment to also inclusive employment. Could you talk about that and what that means to you, and how you think the Fed can play a role in inclusive employment?
So really, the goal is maximum employment, and the insight that we had, and part of it just was what we saw during that long expansion, is that to be maximum, it really needs to be inclusive, meaning you need to be looking. Ultimately, as I mentioned, we don't have the tools to target particular groups or anything like that, but we do look at the data, by racial and gender and income and all of those things, immigrants, native born. We look at that data, and all of that informs our assessment of whether we're really at maximum employment. So we said that maximum employment is a broad and inclusive goal, and that's part of our framework now.
Great. And I think words matter, and I think having that word inclusive in there does make a difference. I'm going to start opening it up to questions in about 2 questions. So people can come to the mic, but we are giving preference to students. So we'd like students to stand up first, and then all the rest of you after. But I've got lots of questions that I could keep going on and answering. But let me ask you, this visit is part of some of the learning tours that you do throughout the country. And, you have thought that it was important for you to get out and actually talk to people about how they experience the economy. Could you give 1 or 2 things that maybe surprised you or that were important insights as a result of actually getting out and talking to people?
So it works 2 ways. Of course, we have an obligation to go out and we want to explain what we're doing, and that's just part of our job. We want the public to understand what we're doing and why. That's part of it. The other part of it is, we get incredible amounts of data, right? Aggregate data, and you can only stare at it so long. I find, and I think all my colleagues find too, when you talk to people about their lives in the economy, it starts to form into a story and into a better understanding of the details of the lives that people are leading. So, I mean, I remember many trips I've taken, and inevitably you come back and you say, "Wow, I really learned something there," And I mean, we went to the Mississippi Delta a few years ago and at Mississippi Valley State, spent a great day there, visited a bunch of businesses and community depository financial institutions. And what did I learn? I learned what life was like in the Delta, and the way they live and their aspirations. Met some really talented kids, by the way, which was great. I learned that. I was in another one. I was in York, Pennsylvania, which is a small manufacturing town. And if you think about smaller manufacturing cities in the United States, my muscle memory would be that they must have really suffered because so much of our manufacturing base went overseas with China coming online and other countries as well. And interesting thing about York was that what I learned was they actually had a strategy to combat that, and it had kind of worked. I mean, they had brought resources together around some manufacturing and some other business things, and it worked. York is a healthy, thriving city, and there are many other examples of cities that are just lost their manufacturing base and they've just kind of collapsed fiscally. But I think it was interesting to see that if you have a plan, it can actually work. Mm-hmm. And I'll go home and I'll think about this trip, and I'll no doubt have learned some great things.
Great. Well, we hope you will. One last question before I open up. So what does fun look like for the chair of the Federal Reserve Board? Like, you can't go to a cocktail party and say much. How do you have fun?
For me, a big party, and I mean this is really as fun as it gets, is like a really good inflation report.
Okay, first question.
Thank you for coming to speak with us today. My name is Catherine Stewart. I'm a graduating senior at Spelman College, majoring in economics, originally from the South Bronx area of New York City. So the Fed aims to have 2% inflation rate and to maximize employment and price stability. And as you mentioned earlier, the inflation rate is currently at 3%, so not necessarily where the Fed would like it to be. As we know from the principles of macroeconomics, over the long run in the business cycle, inflation decreases during recessions and increases during expansion. So my question for you is, how will the Federal Reserve address the volatility of inflation while avoiding a potential recession in the economy? I know you mentioned earlier that one way would be raising interest rates, but can you think of another way that could address this dilemma?
Great question. Thank you. So. If you look at the history of campaigns to bring down high inflation, what you will see is in most instances, not all, but in most instances, that has wound up. We know that higher interest rates, of course, will slow the economy, and that's the tool we have to bring down inflation. In many instances, that has resulted in significant job loss necessary to restore price stability. We haven't seen that here, and we've always felt, my colleagues have always felt that we had a chance, that there's a path to getting inflation back down to 2% without that kind of large job loss. And I still believe that. I've always believed that, and we're on that path. But some softening in the economy has happened. You've seen growth slowing back to a more sustainable level, and we hope we can stay on that path. We have to restore price stability because price stability is really the bedrock of the economy, and everyone once prices are really stable, inflation's stable around 2%, people can stop thinking about inflation. They can focus on everything else. When inflation is volatile and high, not many are old enough to remember what that was like, but it's really bad for businesses and households trying to plan. In terms of other tools, I wish we had them, but the fiscal authorities have their tools, we have our tools, and our tools are interest rates and our balance sheet, which affects interest rates as well.
Next, Mike.
Thank you for that. Can you all hear me?
Yes.
Sounds good. Good morning, Dr. Gale and Chairman Powell. This has been such a didactic conversation, so thank you for all that you shared. We spoke a little bit about optimal employment and maximizing it and ensuring that it's inclusive. And so earlier when you were speaking, you spoke about your background, Chairman Powell, in private equity and investment banking, and even alluded to entrepreneurship. And so my question for you is, during these contractionary phases of the economy, or where there's threats around contractionary phases of the economy, how can minority entrepreneurs ensure that their ventures are backed and armored to ensure that they're still stable during contractionary phases and when those policies are in use?
So how can minority entrepreneurs assure that their ventures are supported? So first of all, let me say entrepreneurship and innovation are kind of the secret or not so secret rocket fuel of the economy. It's entrepreneurs, both business and social entrepreneurs, who look at the world and see something missing and create it there. And I never had that gift, but the people who had that, those are the ones who really change the world. And you're young, you're starting out your careers. If you feel that way at all, you see something missing, my advice to you is to go for it, and don't hesitate. And so entrepreneurs are huge. That's how things happen in our economy. Someone says, "Hey, we don't have an X. Let's create this." So in terms of how to make it through hard times, I mean, it's right now, of course. If you go back before the pandemic, there was a whole lot of money for entrepreneurs in every field. It was a time when, and that has dried up a bit. Venture valuations have come down, but just know that it's a cycle. And many ventures have gone from promising to almost dying to incredibly successful over time. And if you look back, you talk to any of the great entrepreneurs, they'll say, "I had a time when I came this close to just wrapping it up and going to law school." Nothing wrong with going to law school. But they'll say, "I stuck with it, believe in your dream, and keep pushing."
Thank you so much. Next slide.
Dr. Gale and Chairman Powell, I want to thank you for hosting this forum for the Atlanta University Center. My question for you is, how do you anticipate the markets?
And your name?
My name's Jonah Watts. I'm a sophomore business finance major, econ minor over at Morehouse College.
Thank you.
My question for you is, how do you anticipate the markets will respond to the acceleration of artificial intelligence and economical resilience of Americans in the long run? And what provisions has the Fed sought to account for this?
So artificial intelligence is something that everybody's spending a lot of time trying to understand, and we have experts in all the time and try to understand its implications for the economy. And there's just a range of views. We don't really know. The question will be whether it is employment augmenting, like so many technologies, so that it's not, or is it employment replacing? And over time, it may be first one and then the other. But that's the question. So if what new technology does is it raises productivity. In the short run, it can sometimes put people out of work, and that's been true of advancing technology for forever. So what is AI going to be? And I think we have a very healthy discussion going on out there. We actually had a meeting at the Board of Governors in Washington with 6 or 8 of the very well-known. These were academic economists and experts, and they were split. There are people there who are on the optimistic end side of things, saying, we basically have a labor shortage and the economy wants to grow faster and AI is going to help us do that and it's going to lift all boats. And then there are other people who see that it can replace so many tasks that are actually not just that are pretty complicated tasks that you need some education to carry out, but AI can actually do them maybe even better than people. I don't think we know. I think that there's also another side to it, which is the potential systemic ramifications of having AI and the financial markets interacting. And so there's a lot of thinking going on about this. We're in the early stages and a lot of uncertainty. So I'd say going to be a while before we really understand how it needs to be regulated and how do we capture the obvious potential productivity increasing benefits of it without experiencing macroeconomic or financial stability costs.
Do you mind going over a little bit? Great. So we'll take the people who are standing now, because we're at risk of going well over time, but would love to get the next questions in.
Thank you, Dr. Gale. Hello. Thank you both for being here. I'm Alicia Sawyer, a senior economics major from Atlanta, Georgia, also a Lisa D. Cook Scholar. And my question is really about your background in investment banking and private equity. How has it impacted your decision-making process, both when you initially entered the public sector and where you are now?
So I've enjoyed all of the different parts of my career. I really feel like I learned a lot, and they all kind of inform everything. But so I was, when I was an investment banker, we were providing financial services to largely companies. So I learned to understand the capital markets and also business models. When you're working with a company, you need to understand, why is this company here? What does it do that other companies can't do? How well does it compete, and that kind of thing. So it was a real education in both how financial markets work and how they value things, and also in business strategy. You need to understand the business strategy of a company to give them the service that they need. As a private equity investor, you're actually putting money to work behind these things. And I'd say what I learned there was a lot more about business models. And Warren Buffett likes to say, when a good manager meets a bad business model, usually it's the business model that wins. So you look for very strong defensible business models, and you also look for great management. I'll tell you something about management. When I became a private equity investor, I asked the head of our firm, who was a Hall of Fame investor, tell me about how do you spot a good manager? What does a good manager look like? How does that, what are the characteristics? And he said, there's so many different ways to do it. And so what I've observed is, people can become good managers and good leaders who are very different from one another. So within each person, as long as you have a high level of self-belief and are willing to work really hard, there's a leader in there, there's a manager in there who can do it your way, in your own particular way. I mean, there's some common factors, but it really is remarkable how many different paths there are to being successful in management and leadership.
Thank you.
Good morning, and thank you, Dr. Gale and Chairman Powell, for speaking with us today. My name is Peyton Thomas. I'm a senior psychology major from Hampton, Virginia. And I know that you spoke to a little bit what the Fed can and cannot do in terms of the racial wealth inequality in America. Do you have any advice for what we as young Black college students can do to help combat that racial wealth inequality?
I will say this. The thing that has always moved me the most in that area is education. So I was the founding chair of an inner city charity in Washington, D.C. I was also active in a similar charity in New York City to help inner city kids get an education. And you find their parents, or often their single parent, are desperate to get them the education they want and keep them away from trouble. And so there's so much to do there. And, every kid who gets through 8th, 9th, 10th, 12th grade, and is doing well at it, it's just a person who now has a chance at a middle-class life. So I think that, to me, that's the thing, our education, it's really hard and really important. But education is the road for people. We have... One form of inequality is mobility. And there's a lot of work by an economist named Raj Chetty, whom I know my colleagues know, who really measures mobility. And U.S. actually has lower income mobility than other major democracies, and it correlates heavily with race. So I think there's so much to do there. I mean, my wife and I spent a lot of time and no small amount of money supporting this cause over 25 years, but I think that's a great cause.
Thank you.
Hi, my name is Maya Spencer. I'm a sophomore economics major, management and organization minor from Williamsburg, Virginia. And my question is, what are the Federal Reserve's observations or analyses regarding the current trends in reduced consumer spending, and how does this impact economic indicators and the Fed's monetary policy consideration? Consumer
spending, yeah. So consumer has been very strong, and it's been surprisingly strong. There was what were called excess savings. So people couldn't spend money on trips and, restaurants and bars and things like that because it was COVID and everybody was staying home. So they saved money. And also the government gave, checks to people to sort of make them whole and replace their lost income and that kind of thing. So there were particularly people who were income constrained had much larger piles of savings than they had before the pandemic. And there was always this thought that that would get spent down, and that so this very strong spending we had in 21 and 22 would ultimately go away. What's been amazing is how strong consumer spending has continued to be, and it may well be. You do see, though, you see credit card borrowing going up, you see defaults going up now. So we may be actually getting to the end of that. So to your point about monetary policy, we're of course very, very carefully watching as the economy appears to be slowing this quarter. We think it's quite early in the quarter to be able to say that, but we think the third quarter was very, very strong GDP. We think it's slowing now based on the limited data that we have, and all forecasters basically are saying that it will be. We're looking to see how much slowing there is. 70% of the U.S. economy roughly is consumer spending, and so that's going to be the big thing. As long as unemployment remains low and employment remains high and wages are moving up above inflation, though, there's no reason why spending wouldn't continue to hold in there.
Thank you.
Hi, I'm Anna Princito. I am a sophomore international studies major from Dallas, Texas. And you touched on public service, and I really enjoy that because I believe that if you have an opportunity to give back, always do so. We are blessed to be at an institution that has a plethora of opportunities, but for those who do not have access to higher education and are just trying to make ends meet, what are the public service policies put in place that the Fed has, and how can we get involved?
With the Fed?
Mm-hmm.
So we hire, for example, if you look at the Atlanta Fed, we hire research assistants right out of college to work. There are some RAs, I think, at the Atlanta Fed. Raphael's nodding, from Spelman. So we're very much poised to take in young people. And I would just tell you to, if you look on our website, reach out to us. We'll be very happy to interact with you. And there are 12 reserve banks around the country, and they're always hiring research assistants. There's also the Board of Governors in Washington. As you get down the road, if you were to do an econ PhD or a law degree or just a general public policy, want to do public policy, and you've got some experience, we have. In the whole system, we have over 30,000 employees, I want to say. Mm-hmm. But that's the 12 reserve banks and the board together. We want people who want to do public service. I'll just tell you, it's enormously satisfying to do public service. It's also satisfying to work in the private sector with a company and share that mission. You feel the same way with that in the private sector, but nothing quite like serving the public.
Thank you so much.
Thank you.
Phenomenal questions. So I almost sat back down because they were so impressive. So I could just give a hand to the Spelman students. But Donnie Beamer from the Atlanta Mayor's Office, and I oversee our Office of Technology and Innovation. And so we want to make sure our entrepreneurs succeed. So see me about that afterward here in the city. So thank you for being here. Thank you for organizing it. And it's a special treat for me because I'm a classically trained economist from Georgia Tech. I see my dean in the front. But I'm wondering, is there a target on labor force participation? Because unemployment is low, but it feels like those labor shortages you talked about are remaining, and it's been much larger in how it impacts our experiences and also people's household income than what's reported.
Great question. Let me open that up a little bit for people. So you have the general public, right? And a certain number of those people are either working or looking for work, actively looking for work, as in they've looked within the last month. And those people constitute the labor force. They are participating in the labor force, either by being employed or by actively looking for jobs. But there are many, many people who are not in the labor force. And if you're not in the labor force, then you're not counted as unemployed. So you have to look at all of those things to understand how the labor market's going. During the pandemic, many people dropped out of the labor force. And so I thought that when the vaccines came out and the economy reopened, that people would come right back, but they didn't. You ask, is there a number that we target? The answer is not really. We have an assessment of if you look at what drives, the thing that is happening with labor force participation is as the population ages, as people get into their older years, they become less likely to be in the labor force, and so there's a downward trend in labor force of about 0.25% a year. But that doesn't mean in any given year that labor force participation can't go up. There's nothing like a really hot labor market like the one we've had to bring people back in, and it did in 2023. Or people stopped dropping out. It's the same thing. The net was that labor force participation increased. Immigration also increased, that's a whole other thing. That's just an increase in the population, and immigrants who come in, they tend to go into the labor force in about the same proportion, roughly, as people who are already here. So we wouldn't have a particular number. We're not quite back to the level of labor force participation that we were at before the pandemic, but that was before the pandemic we had a 10-year, 8-month expansion, and participation tends to creep up as a lagging indicator in a strong labor market. So we're at a pretty high level of participation, as high or higher than the models would have predicted. But we'd love to see it go up further. We actually have lower labor force participation rates than many other advanced economies, which is not our self-image as a country, and not where we want to be. There's just a lot to do in the labor field. So another thing, if you're looking for an area of economics to study or a field to work in, the whole area of labor market economics and how do we support a better workforce, invest in a great workforce is a very important area to think about studying and working in.
Well, this is wonderful. Are you getting ready to close out? All right. Well, I will let you close out. Dr. Holmes, thank you for all you've done to help to pull this program together. I also want to thank Lauren for her wonderful introduction. And I'll let you close out, and I might have one word after you.
Oh, sure. Always. Well, no, I want to thank you, and thank you, Chairman Powell, for making this an enlightening and engaging event. Thank you. Thank you, Chairman Powell, for coming to Spelman. Thank you to your team for making this a successful event. And thank you for everyone in the audience also for participating and for your thought-provoking questions, for those who did have questions. I want to thank the Spelman community who also helped to make this a success. So the president's team, communications, STS, public safety, and many more. And President Gale, I will let you.
You wrapped it up lovely. I would just say, again, thanks to everybody. This has been a fabulous morning. It has been a wonderful conversation. Thank you to you, Chairman Powell, for spending the time, giving of yourself, but most importantly for what you do for our nation and for the world. Public service takes a lot out of the person, their family, so we really owe you a debt of gratitude. But I think people recognize after this conversation why you are the right person in that role for these times. So thank you so much.
Thank you. Thank you.
Hey, Powell, let's go. I love Powell, guys. I know some people don't like him because he has to kind of, they have to kind of forcibly manipulate the market in ways, right? And they have to be careful what they say, what they don't say to try to make this or that happen, etc., etc. So, some people don't like him, but hey, guys, that is the end of the event. I thought it was actually some nice conversation. I'll say this, I expected it. It was called like a fireside chat, so I had no idea what to expect, how they were going to talk here. But that was actually not too bad. I'll say I learned some stuff. It was kind of interesting to hear like how Powell came up through the financial system to become where he is now at the Federal Reserve. But other than that, guys, really thanks for sticking around today on Friday. It's 11:11 Central Time, so only a couple to a few hours left in the market here. So let's do a quick recap because the QQQ and the SPY started really recovering. And I mean, that SPY is actually to new highs over the past few months. So on this recovery ever since October, SPY is now retesting the recent high right around 459 to 460. So we're very, very close on SPY. We go to that 1 minute chart. It looks like a freaking penny stock or something on an intraday chart. But whenever I'm looking at the SPY here, it's still a little bit too high in the short term for me, but that means that the long-term account will continue to do well, right? And it's good. It's pushing up some of these other stocks like Zoom, DraftKings, and others have been holding up fairly well today. Zoom has been exploding ever since we were talking about it earlier. So hopefully some of you guys got some good entries there. I know a couple of you guys definitely did. But yeah, right now, looking good. The overall market is ripping up, and it's been a pretty good Friday. There's been a lot of opportunities out there in the market. There's been a lot of opportunities, a lot of different plays today. A lot of good price action to the upside, and honestly, even down, like the SPY on some of those rejections. I'm sure there were a lot of put players that caught those, but of course, the market is resilient and ends up flying back up. So I appreciate you guys joining up today. Hope you guys have a fantastic Friday and have a great weekend as well. But I'll talk to you guys later. Have a good one. And of course, walk away profitable today, guys. There's some stocks really going up. Just realize they won't go up all day long. But I really like Zoom here for the next couple to a few weeks, getting some good movement. And I'd love to see him get to 71, then 74, and then eventually 80, hopefully. So let's go, guys. Have a great rest of your day. Thanks for joining up. Thanks for sticking with us. I know that, that event might have been a little bit boring to some people, but fairly interesting still. Fairly interesting. So have a great rest of the day, guys. I will talk to you later.
You can't stop.